We want to switch gears now and talk about the impact of the government shutdown. Joining us now for perspective, we've got Chief Investment Officer of Tematica Research, Chris Versace, also runs the Street portfolio over at the Street. Chris, thank you so much for joining us today. Let's talk about the data void that we're in with regard to the government shutdown. How do you think investors are reading through, this data dearth, essentially?
Yeah, I mean, without question, the shutdown is really kind of putting a crimp in the volume of data that a lot of people tend to rely on. So what it means is we've got to look for other sources of data, or maybe, just triangulate the data that we do get a little more carefully, Diane. And, look, there is a lot of data from other parties. I think folks just have to become used to sourcing it, right? And understanding what is it telling you and how does it kind of fold into the investment mosaic or the data sets that you're already using. For me, ISM and the reports that they put out every month they're just a treasure trove of data that really kind of sets the pace for what we're likely to hear, whether it's on the jobs front, inflation, what have you. So, we really just have to, become a little more fluid in what we're doing.
Speaking of that, I know something that you've been paying attention to, but I wonder how much market should pay attention to. The Carlyle Group had released its own jobs estimate, right? Showing just 17,000 jobs added in September. Obviously, that will be below kind of what expectations would have been were we to have received a jobs report. But how much weight should markets give private models like that, knowing that, this is not the usual data set? And I know you mentioned triangulating what data we get, but this is new to markets.
Yeah. So what I'll say is this, in my experience, it's foolish to hang your hat on any one particular data point. That's really why I say you have to triangulate the data. So when we're thinking about, we're not getting the employment report, well, what did we get, right? We got the ADP September, payroll report that showed, job losses inside of both the ISM manufacturing and services and even the S&P Global PMI reports. We saw, contracting labor market for both manufacturing and services, right? And then the Challenger report. So to me, when I look at Carlyle's data, 17,000 jobs created the month of September compared to what the market was looking for at 54,000. I'm not so much worried about the actual 17,000 number, just the fact that it corroborates a much, weaker than previously expected jobs market. That's the way that I would use that data, more confirming and directional.
Okay, Chris, let me ask you this. We're about to start the next earnings season, right? We'll get Delta Airlines results tomorrow, and then the banks come in force next week. What are you expecting to see, this earnings season, and what are you looking for as a theme?
So I think the September quarter earnings season is going to be extremely important, right? We've seen the market continue to melt up. Arguably, it's either stretching the valuation and earnings have to catch up, or something else might have to happen. And there's varying degrees out there. So of what people think is going to happen. We've seen S&P 500 targets move higher. We've seen some folks increase their EPS estimates for the S&P 500. So I think we're going to get a kind of a litmus test of what's really happening over the next couple of weeks. And, for me, the thing that I'm really focusing in on is margins, particularly gross margins. And the reason being is we've heard of late that companies are having a much tougher time passing along price increases, but they're still contending with higher input costs. So, when you kind of look at that pressure, it means that margins, could not expand as much as folks were looking for. And we had some great confirmation of that in McCormick yesterday. People are returning to eat at home. The company is seeing better volumes, but their margins fell, and they reduced the margin guidance for the back half of the year. So I think this is kind of a canary in the coal mine for where we're going.
So you think there's the potential for some fading of pricing power along with the pressure from input costs?
I think in some cases, yes. There might be some others, Diane, though, that are potentially a little different. Take a look at Hershey, right? We're seeing cocoa prices fall, sugar prices are falling. and they announced back in the summer that they're going to have put into effect another price increase. So there might actually be a little incremental pricing power over at Hershey. So it's not an across the board comment, but again, we're going to have to pay attention to what companies are saying about their margins, and I hate to use that word again, but triangulate what we're seeing.
Obviously, I don't mind using that word again. But Chris, let's talk a little bit about the consumer. We're in the middle of Prime Days, Walmart deal days. You name the retailer. They're trying to do some kind of sale right now to get the consumer to continue to spend. What's your sense of how the consumer is doing and who's performing the best in the current climate?
So I think that the consumer continues to struggle. Just take that comment that I made about McCormick and the increasing volumes that they're seeing for their products. It really signals that folks are starting to return back home to eating more, just because they're being more mindful about what they are spending. And we all know that dining out has gotten a little pricey, to say the least. I do think it's going to impact the holiday shopping season, but I also think that what we're seeing from, as you mentioned, Amazon, Walmart, Costco, and the others, they're trying to extend the holiday shopping season and potentially pull forward demand like we've seen the last few years, particularly as Amazon has spearheaded this with their latest Prime Big Deal Day event. But what's interesting, Diane? They almost have a big Prime event once a quarter now.
Interesting. That's, I guess, a good point when you think about it, because now it's going to be 3 times a year, since they have the summer one, they have the fall one, and now Black Friday, basically. So we just need one more quarter, I suppose. All right, we'll have to leave our conversation there for today. That's Chris Versace, Chief Investment Officer, Tematica Research, and Portfolio Manager, The Street Pro.